Okay, here we go. So welcome to everybody. We're going to be talking about my most favorite-ist indicator, my 200 EMA indicator. This is something I put together. This is a trading technique I've put together. This is an indicator I've built. Actually, I haven't totally built it. I had somebody that knows how to build indicators build it, and they did an awesome job. And it's just a favorite indicator. I have been trading for many years, well, not many, but about 13 years, and I've used every indicator I've ever been able to find, and to not my complete satisfaction, which is why I had to make one. And I feel like this one is just so excellent. I love it so much. So we're going to talk about the 200 EMA indicator, how it works, what it does, all of that good stuff. Just a couple of reminders of details here. I'm Jared Johnson. I should have a picture up, but I don't. But if you follow me on Twitter at DayTradersFX, you will absolutely know what I look like because I'm sending out pictures about every second. I've got a bunch of little kids, and I always, by a bunch, I mean two, and so we always send around pictures on there. So, anyways, that's where my pictures are. But follow me on DayTradersFX or excuse me, on Twitter at DayTradersFX. I send out some free trade ideas, some free charts, some things about this webinar and so on. Will be posted on there. If you have any questions, I am so much more than happy to help. Send an email to Jared at daytradersfx.com. I am legitimately bad at answering emails, but I have somebody at daytradersfx.com that will answer your email right away and make sure that you get all the right information immediately. So send us an email if you have anything, any question about anything that you see in the webinar today, any question about the trade group, any question about me, any question about anything, you can just send it right to that Jared at daytradersfx.com. And you can find all that information at the website as well, or on Twitter. You can send me a message on Twitter. I get back to those pretty quickly. So just this, there you go. And you can also see in the announcement area, that green box, there's my email as well. So if you have any questions, just jump on there. Okay, today we're going to be talking about the 200 EMA indicators we talked about. If you do not have it, I would say that a good chunk of people here do have it. And I would say that there's a decent amount of people here that do not have it. And if you do not have the indicator, you can get it right here, j.mp/200 EMA. Just that simple. Go there, download it, and we're going to talk about how to use it. I'm going to paste the link right here as well. And there you go. So you can get it from right at that link. And we're going to talk about how this works and what it does. The 200 EMA indicator is really excellent. And let me just give you a brief overview of what it does. Just pretty simple here. What the indicator does is it measures the time the market spends away from the 200 moving average. That's why we call it the 200 EMA indicator. It's looking at how long the market is staying away from the moving average. Number one. Number two, it measures the distance that the market gets away from the 200 moving average. And as a result, it helps us to identify when markets are overextended, overbought, oversold, when trends might be coming to an end. And likewise, when we see that these numbers are really low, and I'll show you a lot of examples of this, it helps us identify new trends. It helps us see when trends are just getting started and when we might be at the beginning of something major. And so it's super good for that kind of a thing. And likewise, it helps us identify those ends of trends where we can find reversals and trade pullbacks and that kind of a thing. So it's really excellent for that. So that's kind of what it does and why we love it. So let's look at a couple of examples of how this works. So first off, if anybody does not know how to use this indicator, I'm just going to spend just a couple of minutes right now just showing you how this works real quick here. So if you go to that link that I just sent you, which is this right here, 200 EMA, j.mp/200 EMA, it's going to take you to my website. Here's a little webinar I did a little while ago that explains more about it. We're going to cover some of those details, but if you just scroll down, download indicator here, and we're going to download. We're going to click yes, download, and it's just going to pop right up and allow us to download that. So as soon as we download that, I, for one, will save it onto my desktop to kind of easily access it. Save it onto the desktop, and then we close all this out. So once we save it onto the desktop, we just go and so just real quick, is audio still coming through okay for everyone? Sharon seems to be having audio problems. Okay, so might just be a little issue there. Okay. Um, okay, so this is recorded, so if anybody is having any audio problems, you'll have a second and third chance to get back at it. So that'll be no problem. Okay, nice to see you, Don. Welcome. So when we click on that link, we download it, we save it to our desktop. Yes, Ralph, they will be. So we save it to the desktop, and from there, we're just going to go to our desktop. I've got a whole bunch of files there. We're going to go to our desktop and just right-click and save that. Right? Is everybody familiar with how to do that? Just right-click. I don't think I even have it on my desktop right now, but we just right-click and save it, and then we're going to go here to our data folder, and there's a video. There will be a video as well on how this, how to run through the installation process. But I just want to show you real quick. So we're going to right-click that as soon as it downloads to our desktop. Right there, we're just going to see those details. We'll go to our MetaTrader. Make sure MetaTrader is open, and we will. Let's see. I'm waiting. I gotta have this screen update there. There we go. We're going to go to our file, open data folder, and we're going to go right here, and we're just going to paste the indicator in the first place when we open our data folder. So you're going to see like this, all these things, templates and MQL and all this stuff. Don't even worry about that. Just right click and paste the indicator right in this first spot as soon as you open your data folder. It does not have any viruses actually, but because it's an executable file, Tony, some will pick it up. Some like Norton's will flag it because it's an executable file. But I promise you, it does not have any viruses. It does not have a Trojan virus or anything else. But it is an executable because it has to download something into your computer. So what it's downloading into the computer, or uploading, I guess, into your computer, is past history, because this is looking at history of the 200 EMA, and it goes back a long time. So it's going to upload some Excel spreadsheets into your MetaTrader. So that's probably why you're getting an indicator like that. So it is going to release some files into your computer so that it can read all the history. So it's totally safe. Most people in here have been using it, and I don't think anybody's had any problems. So when we put it in here, we're going to just double click on this right here on the 200 EMA distance and click on run. And it's going to run and do all of that stuff. So everyone good? Download it, save it to your desktop, copy it, go to your file here, open up data folder, right click and paste it in the data folder, double click, run, you're done. And I will have a video included about this. It's just a simple short process, but there will be a video included here, and you'll be able to kind of review how to install that. And of course, if you have any problems installing that, just easily send me an email, send me a message on Twitter, and we'll make sure you're taken care of. So that's how it's going to work. So once we've got it installed, then we'll just restart our MetaTrader. And then what you can do is you can go to a new chart, like say this chart, for example. I've already got the indicator on here. Let's remove it. So now that I've got it installed, so once you have it installed, you can just go right here to Insert, and you can go to Indicators and Custom and 200 EMA Distance. So once it is there, Indicators from the Insert button, Custom, 200 EMA Distance. This is all recorded. I promise. It seems like it's kind of a lot of steps, but it's really once you do it once, it's a piece of cake. And again, I'm here to help if anybody has any questions about anything. So we just go there and we click on this, and it'll all the default settings are totally fine, and we hit OK, and it places the indicator over here in the right hand top corner of our charts. What I have done is I've saved a template. So once I get this installed, I just go right here. Does everybody know how to save templates? You don't have to, but this is an easy way to do it. You go up to your templates button right here and just click on save, and you can name this like 200 EMA indicator or something, and click save. And then anytime you go to a chart that doesn't have the 200 EMA indicator, you can just go right to the template and go to whichever one you saved it as, and it will apply that. So you don't have to run through the whole process of of all of this stuff here of indicator and custom and all that. Is everybody okay so far? Does that make sense? Does anybody have any questions about that? Makes sense? Are we good on just kind of the basic install? Any questions? Any questions? Okay, so far so good. And we'll buzz through this, and then we'll spend a couple of minutes at the end just helping anybody install it that's having any trouble whatsoever. So if you have any issues, just hang on, and we'll get to the end, and I'll walk everybody through it again and again and again, as many times as we need to. It's no problem. So I want to make sure that nobody has any problems getting this up and running. Okay, so that's the nitty gritty. That's how we get it installed on the charts. That's how we get it running. That's how we get it telling us information. So now that we have it on our charts, what good is it going to do us? What information are we going to get out of this? Well, as I mentioned, the indicator tells us time away from the moving average and distance away from the moving average. Now, why that's important is because, yeah, we can say, well, the indicator spent a week away from the moving average, or excuse me, the market has spent a week away from the moving average. Why do we care? Or it's gone 300 pips away. Why do we care? Well, when we put it in context to what the indicator is telling us, it becomes very, very important and very, very interesting. We have some extreme examples, we have some minor examples, but just to give you a little bit of an idea of how this goes, can everybody see the text in the upper right-hand corner here? Can you see that fairly clearly? I wonder if there's a way that I can zoom that in. Make sure that you're zooming in if there's any way. I think there's a way to make it full screen on your end so that you can get a good view of this. But I want to make sure that you can see all of this stuff right here because this is pretty important. So I just want to make sure that it's not too small to read. So everybody can see it okay? Okay, good, Lila. All right, you can see it. Everyone sees that fairly clearly. Here is a little bit of what this indicator tells us and how it works. Okay, so first and foremost, it is telling us in the indicator is set, and again, this is why it has to load some files onto your computer because we've done kind of a pre-run on it, and it looks back. I found a MetaTrader that had the most history that I could find because the more history, the better. It gives us a more accurate picture. So I found one that had the most history I could find, and ran the indicator, and it analyzed all the charts and counted all the candlesticks and all the pips and all the details in relation to this 200 moving average. And it saved that information, and that's what it uploads into your computer or into your MetaTrader when you install the file. And so I wanted something that just had the most history so we could get the most accurate picture, because what we're looking at here, this first line right here says EMA average. That's our exponential. This is a 200 exponential moving average. And what this is telling us is how often, on average, over the last couple of years of running these statistics that we've done, on average, how often does the market come back and hit the 200 EMA? Every so many candles, how often does it do it? Well, this tells us that average number. About every 71 candles on the daily chart, so about every 71 trading days, this will come back and hit the 200 moving average. Now, why do we care about that? It gives us a good point of reference. How far has the market run in relation to past movements? How much further could it run? If something is going up, eventually it's going to have to come down. And if it's going down, eventually it's going to have to come up. So this just helps us start to identify that a little tiny bit better. So so that we can, know and have a better idea of where the market is. So this is telling us every 71 daily candlesticks, on average, we're hitting that 200 EMA. The next line tells us the current status. So currently, we have this pair, the New Zealand dollar US dollar, has run 115 candlesticks without touching the 200 EMA. So our average number and our current number. This is this is pretty important right here. Sharon, I will show you exactly why that is. I will show you 100% exactly why that is. Right at the end of the webinar. So that'll be a great Q&A part. Will you pretty please remind me when we get into the just question part at the end about that, because that's a really good question. It's something we can cover real quick, so it'll be nice. So again, average number 71, current number 115. So you can see that we've exceeded that average by a decent little chunk. We're creeping up on almost double. We're not quite there yet, but we're getting pretty close to double the number of average candlesticks that it takes to hit the 200 EMA. So is everyone clear on that? Any questions so far what those first two lines are? The average number it takes the market to hit and the current number that we're at right now. Everyone good on that? Any questions? Any questions? Audio still coming through good? Want to make sure that I'm not zooming ahead of anyone. I don't think I've covered anything earth-shattering just yet, but I want to make sure everyone is good there. All right, excellent. All right, so that's our first two things. So as soon as yes, and I'll show you guys why you may be getting some different numbers right at the end. I promise that's going to be a good part. So we're on the daily chart. We're on the New Zealand dollar, US dollar, and we're looking at all these details here. Okay, so first number, average number of candles. Second number, current number of candles that have not touched the 200 moving average. And then we have our fourth line. Well, our third line right here says look for trade, yes. And that yes will pop up as soon as the current number of candlesticks reaches the average number. So when this is, if our current number of candlesticks was, let's just say 65, and the average number is 71, then there would be no data down here. There would be no yes, there would be no look for trades, there would be no percentages, because it hasn't, the market has to reach that average number before it starts to populate all these statistics. An example of that would be like this pound yen right here. Pound yen, you can see that the average number right here is 133, and the current bar is 37. So look for trade, no, and there's no statistics. There's no numbers down there. There's no nothing. So as soon as we get to that average number, then all the rest of this information pops up. So this is telling us look for a trade because we've exceeded the average number of candlesticks that it takes to get back to that 200 EMA. And this is a good little distance away as well. You can see that it's getting pretty interesting. So look for trade, yes. Probability 46%. Now, what does the probability mean? Probability just means that in comparison to past movements on this currency pair on this time frame, our probability that this is going to run back and hit the 200 moving average right now is basically 46%. It's basically 50-50. And it just means that about half the movements have gone this long and this far away from the 200 moving average, and half have gone further and longer without touching the 200 moving average. So that's what this probability number is telling us. So it's not saying get into a trade because you have a 46%. No, it's saying in comparison to past trades, about 46% have gone this far or less, and about 54% have gone further away from the 200 moving average and spend more time away. Does that make sense? Everyone good there? Let me know if you have any questions about that. So the first half measures the time. So we're literally counting candlesticks, 71 candlesticks away. We're currently 115 away. So that's just telling us that's just sheer time away from the moving average. It's giving us time. That's it. Well, the second part is telling us numbers. So as soon as for example, this one right here. Here is the last time. If I put a little line through this right here, that's the last time. That was April 30th of this year was the last time the daily chart touched the 200 moving average. That was about 115 days ago in trading time. Of course, it's not counting Sunday and Saturday and whatever time the market's closed, but that's 115 candlesticks earlier than right now. That was the last time it touched. So so as this kind of goes and runs, the indicator's counting. It's saying, okay, we're 3 away, we're 5 away, we're 25 away, we're 30, we're 50. As soon as we get to 71, which is the average number, then it stops. Then it continues to measure time, but it starts to measure distance as well. So here is the last time we touched, and we're starting to count away. And let's find 71. So 71 is right here. So it's that long guy right there. So that is the average number right there. This is our last time we touched, and here, this is on average where the market is coming back, and it's already hit the 200 EMA. Well, this one clearly has not yet hit the 200 EMA. In fact, it's quite a ways away. It's about 600 plus pips away. So now what the indicator starts to do is measure distance. So it'll start to count pips. Excuse me. So now that it's reached that 71 candlestick distance, it's starting to count pips, and that's what these little numbers are telling us right here, because we want to get as accurate of a portrayal as we can of how long and how far the market's getting away from a reference point. So we can know where the market is. We can know if the market is ready for a reversal, or if it's not really super far into the time that it's gone away from this moving average. And so it starts to count pips right here. And you can see these numbers right here. This will say average pips once it's reached the 71st candlestick away from the moving average. On average, it's run an additional 332 pips. That means that as soon as we get right here, we start to count, and it's gone 332 pips on average. The maximum movement, once it's reached that number, is 792 pips. So on average, it goes about 300 additional pips once it reaches that 71st candle. But in previous movements, the maximum distance we've seen it go is 792. Our current pips past this 71st candle, it's gone 374 pips. So we're right about the average pip number, and we're a little bit higher than the average candlestick number. Does that make sense? Is everybody with me a little bit on that? I'm happy to take a couple of moments right now and explain that, answer some questions, make sure everyone's clear on that. So the first thing we're looking at is how many candlesticks it takes to get back to the moving average. And once it reaches that average candlestick and it hasn't touched the 200 moving average, then we start counting pips. And we start looking to see if we can get an idea on how many pips this is going to go before it starts coming back to that moving average. Everyone good on that? Are you guys following me? Simon, yes. Okay, good, good. Everyone else, don't be shy. Just give me an idea on where you guys all are. Some people get a little bit lost in the explanation here, and so I just want to make sure that you are all medium clear on the whole thing. Okay, Reggie, Russ, okay, good. Damien, all right, all right. Okay, just want to make sure that's making sense. Got to make sure that's not sounding too crazy. So here is where our opportunity starts to get exciting. So now that we have a little bit of a basic overview of how this indicator works, we're looking for how many candlesticks. And then once we get that average candlestick and we still haven't hit the 200 moving average, now we're starting to count pips and candlesticks. And what we want to see basically when we start looking to take trades in any direction is we want to see where the market is right here. We want to see how many candlesticks we're currently at in relation to the average, and we want to see how many pips we're at in relation to the maximum. So I don't look at the average pips as much as I look at the maximum pips that the market has run away from the 200 moving average once it reached that average candlestick and had not yet touched the 200 EMA. So these are the two biggest things I'm looking at: current candlesticks compared to the average number, and current pips compared to the maximum previous movement away from the moving average. Okay, so once we get those two things dialed in, again, we get that probability number, and the probability number is a great thing to keep an eye on. Now, I want you to remember 75% is a number that we want to look at and use a lot. So 75%, I'm going to type that in right here. 75% or greater. Thanks, Jeff. Nice to see you. Is what we want to look for. So 75% on the probability or higher means that we're now getting on the tail end of previous movements. We're now further away, and we've spent more time away from the 200 moving average on whatever chart we're looking at than 75% of the previous movements. That's starting to get us into a really good high probability situation to take a trade and get into a breakout, get into a reversal, get into a trend, get into whatever we're looking to get into. As soon as we reach and exceed that 75% probability. So that's the third thing we're looking at. So first, current bars compared to average bars. Second, current pips compared to max previous pips. And third, probability at 75% or greater. Now, once that stuff starts to happen, we have such a high likelihood of getting into a nice little trade that's going to run up towards the 200 moving average. Now, something that we have to think about here is this is on the daily chart. This one's still developing. It's kind of in that mid area, right? We're at about the 46, creeping up on 50%. This one has got a little ways to go before it starts to get to those extreme numbers. And extreme numbers is kind of what we like to see. We like to see those more extreme numbers because this right here could still kind of go either way, and we still probably have some decent trend left to this one. But as these numbers get higher and higher and higher, that trend is coming more and more to an end. So this is a good example of something that could very easily continue on in the direction of the trend because we're still below our 75%. We're only about 50% of the previous max pips away from the 200 moving average. This easily could have a little bit more to go. And so this could be a good indication that this trade and that this pair is ready to maybe break these lows and continue further down because our indicator is really it's not screaming at us. It's not saying this is a really oversold setup. It's just saying, it's getting there. It's getting there. And this is something that if we wanted to trade a reversal, we probably have a little bit left to go before it gets there. But a little bit more of an extreme example would be like the Euro New Zealand. So if we apply that, remember, these numbers will change on every currency pair and on every time frame. They're set up to work on every time frame. You can see the Euro New Zealand on the daily chart has different numbers than the Euro New Zealand on the 4-hour chart because this is calculated per time frame, and we'll talk a little bit more about that in just a moment. So now look at this one right here. Average number of candlesticks from that it usually takes to touch the 200 EMA, 87. Current bars, current candlesticks, 601. This thing has been running for nearly ever, and it just keeps on going. 601. Probability or look for trade? Yes, absolutely. Probability, 100%. This means that this has gone further than any other movement that we have seen in the past. We have nothing that we have seen so far has gone further and longer away from the moving average than the Euro New Zealand, on the Euro New Zealand than this current setup. 100% probability. Previous maximum pips, 1,103 pips, meaning once it reached that 87th pip, it ran an additional 1,100 pips. This one, it reached that 87th candlestick, and it has gone an additional 3,200 pips. 3,200 pips. John, yes, let's look. Do we have on that 4-hour chart? Yep, 100%, absolutely. We'll use that one. We'll use that one as an example in just a moment as well. So is everyone clear on that? So this has now heavily exceeded the previous maximum pips. It's heavily exceeded the average number of candlesticks, and it's just gone way further on any other thing ever. And this is just such an overbought pair. If you scroll back, you can just see it. This has just gone up and up and up and up and up. So what does that mean? This is all happening on the 4-hour chart. and we've got a little bit of an indication on the daily chart, but we want to look for these arrows under the time frames. There's the 15-minute chart, the 1-hour chart, 4-hour chart, daily chart. Whenever there's an arrow, that means that we are starting to see a setup. We're starting to see a setup on that time frame, and that we need to go to that time frame and just look at these little statistics right here and see where they are. The darker the arrow, whether it's up or down, the more developed the setup is. See on this Euro New Zealand, that daily chart right there, it's like a really light pink arrow. You almost can't even see it. That just means that we're on some lower numbers there. We're at about 50%. Nothing too terribly crazy on that daily chart. But the 4-hour chart, all these numbers, current numbers, are exceeding the previous numbers by a lot, and so that's a dark arrow. In the upward movement, you would see a dark green arrow, and if it's an early setup and it's not totally there yet, then you'd see a really light green arrow. Okay, Ralph, that's a good question. What time frame do we trade this from? Well, we want to find the setup. We want to find the time frame that these things are happening on. Um, and yeah, good question, Simon. I'm going to tell you guys how we take a simple trade with this indicator. So now that we've kind of determined how this works, how to identify a setup, how to do everything there, we want to start looking for simple entries. Just simple entries. I am a breakout guy. I love trading breakouts. I'm very leery of trading just reversals. Something is running up and up and up, and I'm trying to short it. Something's running down and down and down, and I'm trying to buy it. I want to see something run up, and I want to see it consolidate a little bit, and I want to see it break a trend line, and then I'm going to get into it. But the problem is a lot of trend lines break, and then they really just kind of don't do anything. They, a trend line will break, and just because the trend line breaks doesn't mean that there's, a guarantee that we're going to have a great trade. Breakout trading is a little bit tricky, and so this is here to help us with that breakout trading. This is here to say, the breakout that you're looking at right now, if we've got enough numbers here and everything looks good enough, then we have a much higher probability of that breakout working and playing out and doing what it's supposed to do, or what we think it's going to do, if these numbers are backing us up. If we're just getting into some random breakout, we're looking at a 5-minute chart and we're drawing a trend line and we're just buying every time it breaks above or selling every time it breaks below, if we get 50-50 out of that, we're lucky. But this way, we can up our probabilities a lot. So the question is, how do we kind of bring all this together? Well, if we are looking at a 4-hour chart, does it mean we have to take the trade from the 4-hour chart? No, it certainly does not. But it means we have to keep the context of the 4-hour chart in play. So this is telling us that on the 4-hour chart, the market is hungry to get back to this 200 moving average. It's made a long run and a long push away from the moving average, and nothing can run forever away from the 200 moving average. It has to come back eventually. Everything eventually has to come back. Now, the moving average is moving, so it's not saying that right now the 200 moving average is at 172.50, and that 172.50 is always the level that we're looking for the Euro New Zealand to come back to, because we're not. That's not it. This is moving up, and the market's moving up, and this will continue to get closer and closer and closer, and we're just looking for the market to run down and touch that 200 moving average. Now, it doesn't mean that every trade that we get into, we're targeting the 200 moving average, because right now you can see that we're trading in the direction of the 200 moving average very often, but we're not always looking to trade all the way to the 200 moving average. Right now, the Euro New Zealand is 665 pips away from the Euro New Zealand. Chances are pretty good that I'm not going to get into this trade expecting 665 pips right now. But I am expecting this kind of a thing to happen. The moving average has now kind of got this pull on the market. The numbers are so extended. This has run so far. There are very I mean, I just can't even say it enough. Very good chances that this is not about to start a new major trend. Even though there's New Zealand weakness and there may be some Euro strength, to see this thing just go 900, 1,000 candlesticks away, 10,000 pips away, is on the very unlikely side of things, because we're already looking at these previous movements over the last several years, and this has highly exceeded those previous movements. So in kind of a minimal case scenario, we're expecting the market to kind of come back and reset and get to this 200 moving average before continuing on with the next leg of the trend. So I'm definitely not considering this as a possibility of a huge continuation up. I'm looking at the 200 moving average here as kind of a gravitational pull on the market. So what do we want to do? How are we going to take a trade? There's two main things that we look at. This is on the 4-hour chart, but we can still get our entry from the 1 hour and even from the 15-minute chart. We know that the 4 hour is the big overbought chart, but we can still come down to these lower time frames and say, okay, the 4-hour chart is overbought, but I'm looking for a shorter term entry, so I'm going to take my entry on the 15-minute chart, and so we're going to look at it there. But the thing that we want to know is context. We want to know that there's a time frame out there, whether it's a lower time frame, or excuse me, a higher time frame, like a 4-hour daily chart, that is telling us that things are overextended, they're overbought or oversold. In this case, the 4-hour chart is hugely overbought, so we can drop down to a 15-minute chart and say, okay, because that 4-hour chart's overbought, there's pressure for this to go down, and so I'm going to look for a breakout on the 15-minute chart and just trade this to the next kind of viable target. I use missed pivots a lot. Missed pivots are great for targets. I use previous support or resistance levels. I use the 200 moving average itself. Just pretty much we want to trade this down to anything. So if we look at the 15-minute chart, again, the 4-hour chart, hugely overbought. 15-minute chart, we can just draw some sort of very simple trend line on this 15-minute chart, and we look for that breakout to happen. And we trade this down. In this case, we could trade it down to the 200 moving average on the 15-minute chart, or we could trade it down to the low of today, which would be 50, 60 pips, or we trade it down to the nearest support level. We're just looking for some nearby targets if we're trading on a lower time frame. We want to have kind of a quick trade if we're using a lower time frame. If we're long-term traders, then we're going to go to this 4-hour chart and we're going to say, okay, what's the price pattern? What's the setup? How am I going to get into this? I want to have an 800 pip stop loss and a 1500 pip profit target. And so we're going to look at this larger time frame and take our entry from here. So it just depends on what kind of a trader you are. If you want to be a shorter term trader, maybe be in and out in a couple of hours or in an hour, or you want to be in and out in a couple of days or in and out in a couple of weeks, then you'll kind of judge your time frame entry from there. But this setup is on the 4-hour chart. I typically will take my entries from the 1-hour chart most, and some from the 15-minute chart as well. But I just want to know what that bigger context is on the larger time frame. That's number one. That's the time frame question that Ralph was asking. So again, 1-hour and 15-minute charts are the main charts we use for entry. So regardless of if the indication is on the 4-hour or the daily, I'm still going to be, or if it's on the 1-hour, I'm still going to be on the 1-hour and 15-minute chart doing those entries. Number two, I'm a huge fan of price patterns. Price patterns are very important for entries. Price patterns are super, super important for entries. So we want to have a good price pattern for an entry. We don't want to just have a trend line. See, like what we drew right here, a trend line that we drew here, we can draw it from this low, or we can draw it, from anywhere in here. Just again, depending on how short term we're looking to go. I don't want to just have a trend line. What I want to have is a price pattern that's telling me something, giving me more information, giving me more context, because just because this is overbought doesn't mean that it's going to come down the next time it starts to move down a few pips, because you can see that it was overbought back here as well, and it dipped down a lot, and there was great entries there. It dipped down 600 pips and it ran back up without touching the 200 moving average. It was overbought here and it ran down 500 pips. It was overbought here, it ran down 500 pips, and here we are overbought once again. What's it going to do? Is it going to run down another 500 pips? Is it going to finally hit the 200 moving average, or is it going to make one more push away? And that's where price patterns will be so very important. Now you can see pretty clearly on this Euro New Zealand right here that it looks like we have a pretty good bull flag in place right here. A bull flag means here's our flagpole area, and here is the flag itself. Maybe. There we go. And here's our flag. So what this means is chances are very likely that with a price pattern like this, that if it breaks these highs, it's going to continue up like that. because that's what bull flags do. They just continue in the direction of the flagpole, which is this right here. Run up, consolidation, a break, and a run up. So this is a bullish price pattern, even though we have some overextended markets here. So we can absolutely look for an opportunity to trade this higher if it breaks these highs right here. But if it doesn't break those highs, then we're going to look for an additional price pattern. We're going to look for like a little short-term rising wedge that can give us that reversal that we may be looking for to get into that sell trade, to take this back down towards the moving average. So to kind of just recap that little part real quick, we're looking at the indicator to give us some numbers right here. We just want to see if these numbers are higher than the average or the previous numbers. And then we want to find a price pattern. And that's how we get into a trade. So if we have some high numbers, like for example, getting back here, there was on some lower time frames, you can see that there would have been a little bit of a rising wedge right there, you know, a nice little trend line and a narrowing in there trend line. And so that could have been our price pattern previously to get into, this breakout and trade that back down. Nice little rising wedge. This right here also had a nice little rising wedge. I mean, depends on where you draw it, but this is definitely a little bit tricky to draw it from these larger time frames here. But there's also a nice little rising wedge right there. And it broke out and it ran back down again. Now this one right here, so these are rising wedges are nice little bearish reversal patterns, and you can see that they came down nicely and came down nicely. This again happens to be a bullish continuation pattern. So we're going to be, even though we have the indicator right here, we're going to be pretty cautious about trying to short or sell this thing just yet. We want to find, it's a two-leg situation to say the least. We need to have the indicator giving us some good numbers, and then we need to have a price pattern that confirms that entry. So the price patterns again are pretty simple, just bull flags, bear flags, rising, falling wedges, head and shoulders patterns, whatever the case may be, have a price pattern to get that entry. So indicator needs to be semi-clear. The indicator is going to give us the overall direction. So I have no doubt in my mind that sooner than later, the Euro New Zealand is going to run down and hit that 200 moving average. Now, the 200 moving average is currently at 172.50, and when it goes down and hits that, it could be, all the way up at 17400. But it's going to eventually come down and hit this 200 moving average. Our numbers are too high. We've exceeded all previous records and numbers, so this has got to come back down and hit that 200 moving average sooner than later. But I'm not going to try to trade it down to the 200 moving average until I have a bearish price pattern. So just any kind of bearish price pattern. A trend line break is usually going to be sufficient, but if we can take it one step further and get a price pattern, then that's going to be even better. So a trend line is just, we can connect 2 points. A price pattern is, we've got a little something on the top and the bottom, and it's just a little more solid. So like a little rising wedge would be great, or a double top would be great, or a head and shoulders on a lower time frame would be great. Whatever the case may be, we need a bearish price pattern to enter this trade and start trading it down towards the 200 moving average. So again, those are the two most important things. I'm going to let that sit and digest for a minute. Oops, hold on here, and I'm just going to write that down so you guys are all super clear about that. So again, entry number 1, good numbers on indicator. So we want to see 75% or greater probability, and we want to see, my spelling is just really suffering today, and that's greater. There we go. And then we want to see those candlestick numbers exceeding the previous candlestick numbers. We want to see the pips exceeding the previous pip numbers. So that's thing number 1. And then number 2, we want to see a price pattern that agrees with the direction, the indicator. And that's it. That's it. That is the that is the nuts and bolts of this. Now, there's a lot of ways to enter, or excuse me, to manage this trade and other things to look at, but this is our entry. We want to basically see an arrow, and we want to see some high numbers on the indicator, and then we want to see a price pattern. And as soon as that price pattern appears, and we can use the indicator to really push on that price pattern, then we have an incredibly high probability trade at that point. Yes, yes, Simon. Some do get into some pretty ridiculous numbers. But remember, we have the indicator to tell us how far the last movement was. So you can look at any pair and you can see the previous maximum pip movement on any one of these. So this one right here, we had this wild spike up. Remember the euro spiked up and went totally crazy back a little bit ago. Euro New Zealand, you can see it spiked up like 1,300 pips. And so before that, the biggest movement we had was 1,100 pips, and then we had that big spike, and it pushed our average number up to 3,200 pips. Um, and yes, Simon, yeah, good question. If we have it on multiple time frames, it definitely does just get better and better. Right now in the Euro New Zealand, we have it a highly developed 4-hour chart that's ready for a trade as soon as we get a good price pattern. And the daily chart's getting there. And yeah, if we got a setup on the 1 hour or the 15-minute, that just makes it that much better. Absolutely. And remember, we can go to the 15-minute chart and we can see where this thing is. The 15-minute chart is currently the numbers on the 15-minute chart are 127 and we're at 123. So we're going to have the 15-minute chart lining up in just, before the market closes today, we're going to have the statistics popping up here as well. So yeah, the more time frames, the better. Absolutely, the more the better. So remember, we want to have the indicator giving us an arrow and giving us some good numbers and good statistics, and then we want to have a good price pattern to take that entry. So everyone is interested, it looks like, in the dollar CAD. So let's look at the dollar CAD. Let's get rid of some of these levels and numbers and details right here, and look at the dollar CAD. So the dollar CAD looks very similar to the Euro New Zealand, where we have a very developed setup on the 4-hour chart, and then we've got a slightly less developed setup on the daily chart. So daily chart, let's run through these numbers again. Daily chart, 78 candlesticks is the average number it takes to get back to the 200 EMA. We're currently at 102, so we've exceeded it a little bit, not by a ton, but we've definitely exceeded that a little bit. Look for trade, yes, we're going to start keeping an eye out. Probability, 11%, not amazing. Remember this, our previous maximum pip movement away from the 200 EMA, 1,314 pips. Currently, we're 256. So you can see that the daily chart could still have some to go. The daily chart is currently sitting about 750 pips from the 200 moving average. The daily chart could easily continue this trend a lot before really getting into a highly overbought daily situation. But guess what? As we drop down and see some of these other time frames right here, the 4-hour chart now is telling us 100% probability. Our EMA numbers, candlestick numbers, 100 candlesticks on average. Every 100 candlesticks, we're hitting the 200 EMA. Currently, we're 354, so we're more than 3 times the average candlestick number. Look for trade, yes. Probability, 100%. Previous maximum pips, 158. Excuse me. Current maximum pips, or our current pip count, 415. So we're again double, triple the number of pips here. But here's what needs to happen on this dollar CAD. The daily chart is not incredibly okay. I'll tell you about the daily chart and how we can work on that and fix that. The daily chart is not incredibly overbought. In fact, it's only slightly overbought. This could dip down a little bit and then just continue that trend straight up. The 4-hour chart, however, is overbought. And the 4-hour chart, look where our 200 EMA is on the 4-hour chart. It's at 131.30. It's about 175 pips below current market price. So for this to to run down and hit that 200 moving average, it's only got to go down about 175 pips, and that essentially resets the 4-hour chart. But to go down to that 130, 130 area, just puts it right about here on the daily chart, just puts it at the bottom of this consolidation. So if this runs down, it resets our incredibly overbought 4-hour chart, and it just gives the daily chart a little breather, and it gives this daily chart a good chance to continue running. And this is where I said this will help us with trends, and it will help us with reversals. On the 4-hour chart, we need to be looking for some short-term reversals. We need to be looking for this to start heading back down and looking for bearish price patterns that we can get into and trade this back down. On the daily chart, though, as that runs down and makes that 175, maybe even a 200 pip move down from those lower time frames, on the daily chart, we're going to start looking for opportunities to buy the dip, because this is by no means incredibly overextended on the daily chart. So this daily, the lower time frames could reset and hit that 200 moving average without really affecting or changing the trend on the daily chart. And so the daily chart, the longer term picture is probably that we need to be buying dollar CAD, because our daily chart is very average. It's not overextended by any means. It has a long ways it could continue to go. But the shorter time frames, the daily, the 1-hour chart's not setting up on anything yet, but the daily, the 4-hour chart is pretty overbought. And so we need a little reset. We need a little 150, 200 pip move down on this 4-hour chart, which is where our shorter term entry would come from. But then on this larger time frame, chances are very, very good that this is gonna, that most good reversals get higher numbers. We get closer to previous maximum pips. We get more into that 75, 80% probability. We get into kind of that double or even triple current candlesticks compared to the average number. So that's the kind of thing that we want to look for. Numbers that are close to or exceeding the previous maximum pip number, and numbers that are doubling and tripling the previous the average candlestick number, and anything above 75% probability. That's where the big reversals come in. That's where the big ends of trends happen and the big turnarounds happen. But when we're in these lower numbers right here, we're kind of just middle of the road, or we're even less than middle of the road, like this one right here, 11%, then we could still be looking for opportunities to buy dips and get into a trade that's going to take us with the trend. So lower time frame, short term, we're looking for a reversal. Longer time frame, because of this daily chart, we've still got quite a bit to go before we start maxing out these numbers right here. So chances are this trend could very easily continue. That makes sense so far? Is everyone kind of seeing that? So whatever time frame we see the entry on, the time frame needs to be the one that we're taking the entry from or higher. I don't want to look at like a 15-minute chart and then take the entry, have the indicator telling me that there's an arrow on the 15-minute chart, but then I'm taking the entry from the 4-hour chart. I always want the arrow, I want the indicator to be setting up on a larger time frame than I am currently at, equal or larger. So if there's an arrow and the indicator is looking good on the 1-hour chart, I can take the entry on the 1-hour chart. If it's looking good on the 4-hour chart, I can still take the entry on the 1-hour chart or 15-minute chart. If it's looking good on the daily, I can still take the entry on the 1-hour or 15-minute chart. But I would never take a long-term daily entry, entry on the daily chart because the indicator was setting up on the 15-minute chart. Does that make sense? So we want to see the indicator setting up. We want to see some good numbers on the indicator, and then we want to see a price pattern that agrees in the direction of the 200 moving average, in the direction that the arrow is pointing on the indicator, and then we trade that breakout. So this isn't an arrow like as soon as the arrow pops up, buy, as soon as the arrow pops up, sell. No, the arrow is just simply reminding us right here. It's saying the 4-hour chart is above the 200 moving average, it's overextended, and now we have an arrow pointing down towards the 200 moving average. If this were down below, that arrow would be pointing up, just saying that's the direction we're looking to trade, because this is overextended and we want to start looking for trades back towards that 200 moving average. Okay, there is a lot to all of that, but again, I just want to reiterate the importance of the simplicity. All we're looking for is the indicator to give us a nice, solid set of numbers. We want to see that that whatever is currently happening is more than what has previously happened or equal to what has previously happened. And then we want to find a price pattern that agrees with what the indicator is telling us. So if again, if we're looking at the dollar CAD, we need to find a price pattern that agrees with the indicator. The indicator is telling us this is overbought. It needs to come back down, so we need to find a bearish price pattern. And I won't take the trade until I find that. So a little bearish price pattern. I can go down to smaller time frames to the 1 hour chart. I can even go to the 15-minute chart, and I can find some sort of trend line, some sort of price pattern that I can draw in there and take the break when it happens. Okay, so I want to use the next little while. I'm going to stop this recording right now. I want to use the next few minutes to kind of just do some Q&A. Some people have asked some questions about different percentages and different details and so on, and I want to cover that with you guys. So we'll stop the recording right here, and let's cover as many questions as we can. Remember that you can get the indicator and you can get all the details by going right here to j.mp/200EMA. It's my favorite indicator. Once you see it in action, I'm pretty positive you'll be totally addicted. If you have any questions, you can visit my website at daytradersfx.com. You can follow me on Twitter at daytradersfx. You can email me at jared@daytradersfx. I'm here to help. Let me know what I can do, but let's get you going on that. A good way to see this in action and see how we use it every day is by getting a free trial to the trade group. You can get a free trial to the trade group. We use this indicator every day. I talk about it every day. I incorporate it in our trades every time we take a trade. And you can get a free trial right there, and you can spend next week seeing how we use this and getting to ask questions about different setups and different functions of it, and just getting some live market feedback of how the indicator is working while the market's actually moving and running. This is going to be kind of the first part of a series of some webinars that I'm going to be doing. I want us as traders to focus on good trades versus great trades, and how we're going to find good trades and how we're going to find great trades. So this is just a little bit of a warm-up to some of that, and so I want to talk to you guys a lot about all of that. And so we'll take it from there. Okay, let's have some Q&A time. I'm going to get this video posted, and we will start some questions, and I'll show you guys a few more examples and some more things like that. So thanks for joining. I'm going to post this video real quick, and then we'll run into that stuff.